Okay, hi guys, welcome to another FX Street webinar. My name is Ian Coleman. I'm one of the traders and analysts at firstfortrading.com. We supply banks, institutions, hedge funds and retail traders with technical analysis and chart and trade recommendations on a daily basis. Okay, we cover all FX pairs, stock indices and fixed income. I've been a host for FX Street for about the last 4 years, I think. I'm sure more will be able to tell you. In that time, we've supplied various analytics for FX Street. We've got a microsite on the platform or on the website. I used to do a breakdown, something called time frame breakdown, where we looked at certain currency pairs each day, broke them down from sort of long time frames into shorter time frames to find trade recommendations. That's what we're going to do today. We're going to look through as many currency pairs, maybe some commodities, maybe some stock indices, to try and get short to medium term views on where we think these currency pairs are going to go. Okay, we're going to look at correlation, we're going to look at trend, we're going to look at fib levels, Fibonacci levels, we'll look at chart formations and patterns, we're going to look at price action. Also got some symmetrical patterns that we're going to look at, and obviously support and resistance. Okay, if you do want to ask any questions during the webinar, please do feel free. It can be a lonely job sitting here for an hour sort of talking to myself, not knowing whether or not it's making sense to anybody else. So please do feel free to interact as much as possible. Okay, let's get to some slides. I'm also going to show you my chart settings, okay, what I look at and how I analyze the marketplace. So this is going to be a mirror of my charts, and then I'm going to build these charts to try and give you a forecast for April, basically. Okay, so here we've got a basic candlestick chart. We're going to put some moving averages on. The main or the trigger line that I use is a 15 EMA. Let's just make sure that this is the right one. So it's similar to a 15 SMA, apart from the fact that it's loaded to the front end. Okay, so it reacts quicker. So it's a 15 exponential moving average. Now, on most of your chart packages, you should be able to get EMAs. If you can't get EMAs on your chart package, then your chart package really is quite basic, and I would recommend that you either upgrade to a different chart package. You can get some quite decent chart packages out there, even if it's not through your broker, for sort of 25, 30 euros a month. So the 15 EMA, I'm going to place another one on top. And this one's going to be the 62 EMA. We'll just do it in a different colour. Doesn't really matter what colour it is. Okay, and let's just get the 15 back. Okay, so I've got 52 and a 62 EMA. Now the reasons why I look at these exponential moving averages, I don't use them for crossovers. Okay, I'm not looking for buy and sell signals when it crosses. When the short crosses the long or the long crosses the short. I'm looking at them for support and resistance. Okay, I'm quite fanatical about fib levels, and 62 EMA is as close to a 61.8% that I can get. Okay, now through sort of years of back testing, I know that if I lay these on currency charts, stock indices, gold, oil, then they're sound for every product that I can look at. Okay, so I don't have to what they call curve fit. Curve fitting is basically using a simple moving average or an exponential moving average and actually making it so it fits to the fluctuations on a chart. Now the trouble with curve fitting is that you have to keep on changing it, okay, to fit that chart, that specific currency pair or product that you're trying to trade. Okay, the 15 and the 62 MA I found overlays quite well on all charts. And then basically we're just going to put the RSI on the bottom. Now again, this isn't the normal settings. This is an RSI with a 15 setting. I do look at divergence. And for those of you that don't know, divergence basically occurs when the currency pair or the product that you're trading makes a higher high on the chart. So this would be a bearish divergence. So the chart makes a higher high. The oscillator, or the RSI in this case, makes a lower high. So we've got a lower high here and a slightly higher high here. Okay, so that's actually bearish divergence. Let's just move that off. Okay, and what I also want to see, or what I also look for in the RSI, is basically a bearish or a bullish bias. Now, we know the trend is your friend. Everybody tells you all the time. Sometimes it's hard to know when that trend has actually changed. Now, the RSI 50 line is a good indication of what side of the market you should be on. So basically, if it's trading below the 50, then more often than not, I'll be looking for bearish signals. If it's trading above 50, then more often than not, I'll be looking for bullish signals. If it's trading around 50, it will normally mean that we're non-trending, we're consolidating. We can see at the moment we've just clipped it a couple of times this morning, moved up and then rejected. I'm actually bearish on euro dollar at the moment, so that's not a great example. But what we have got, obviously, as I said previously, is we have got pretty decent divergence on this RSI at the moment. Okay, and the last indicator that I overlay on my charts, and I've got a fair few here, is the Ishimoku cloud. I know it looks highly confusing, and in fact I'm just going to get rid of that for 1 second, because I'm going to have to change this EMA, otherwise we're going to get confused. Let's have it in gold. If any of you have come to some of my other webinars or presentations on FX Street, you'll have probably come across one where I explain the Ishimoku cloud. It's not as complicated as it looks. There are certain rules and regulations that you need to adhere to. There are break lines, there's the send lines, and there's a lagging line. Now, I'm not going to go into that today because that will take an hour. So if you do want to get some more knowledge with regards to Ishimoku Cloud, I suggest you either go back and have a look at one of the tape webinars, which I'm sure Maud will tell you where they are in the archive, or you wait until the next time round. Okay, so this is basically what I'm looking at. Now, from this chart setup, I'm then looking for that long list of technical indicators that we talked about before. Okay, I'm looking for trend, fib levels, chart formations, etc. Okay, the trend is your friend, but the trend is only your friend until the trend changes. And for that, we're looking at support and resistance levels, as I said, fib levels, and more often than not, we want to get a bias in a larger time frame, okay, to trade short-term signals. The higher the time frame, the more relevance it has. Okay, if you get down all the way into, I'm not saying that you shouldn't scalp the market, and so some guys out there, especially on FX Street net, that are very good at intraday scalps. I'm not one of those. Okay, I look to follow trend. So what I'm looking for is I'm looking for a higher time frame to give me a bias, and then looking for short-term indicators, price action, to give me an intraday call. Okay, just because I'm a long-term bull doesn't mean that I won't take short-term trades. Okay, but I'm wary that I'm going against what I think is going to be the trend, and that is again another webinar that we produce, which is about money management, about how much risk you should put on, especially if you think you're counter trending. Okay, you should probably trade in half the size that you should do if you're trading with your longer term view. Okay, any questions up to now on the overlays or anything else that I've talked about? No? Great. Okay, so like I said, we're going to break this down off higher time frames. Now the RSI is going to be 15. It's a 15-day setting. My short-term bias in euro dollar. These aren't trade recommendations, by the way. Okay, these are just my view. If you want trade recommendations, then you'd have to sign up to our site for a trial. I'm not going to tell you. I'm not going to say that I'm not going to talk about where I think they're going to go today for actual precise entry and exit levels. I can't tell you on this webinar because it's against, and I'm sure Maud will back me up on this, it's against FSA regulation. Okay, I can't make trade recommendations. I can only tell you where I think they're going to go. But I've got a short-term bearish view and a long-term bullish view in euro dollar. I'm going to explain why now. Okay, first of all, we've got a pretty aggressive move down from last April's high. Okay, this is what we call price action. I'm sure most of you would have talked about it or read about it or seen it in blogs or watched numerous webinars on price action, because it is one of the main topics. What I look for in price action is chart formations at relevant levels. Okay, I cannot ignore higher time frame price action. So here is a classic example of higher time frame price action. At this, I'm just going to get the crosshairs on. I'm not sure you'll be able to see this properly. Okay, here in May, this is a weekly chart. We get a bearish engulfing candle formation, or what some call an outside bar. Okay, the outside bar. There's only really two strong chart formations that I look for: bearish, bullish engulfing candles, and insider army candles. Now, a bearish engulfing candle or an outside bar will take out the full range of the previous bullish candle. So we're in an uptrend. Okay, it then engulfs, so it produces another high, a new high, and then it completely reverses that week's trend, the previous week's trend. Okay, and what that basically tells us is that the market's view or the market sentiment, which is what we're looking for, has completely changed. Okay, it was bullish at the beginning of that week, and then it completely changed and it became bearish. And that, if you look at that candle, that high was then never taken. Okay. Also, a good indication of a retracement level for an outside bar is what they call a Marabou line. Okay, and the Marabou line is not the high and low of the candle, it's the open and the close of the candle, and it's 50%. So the Marabou line Let's just put a trend on there. Let's come in, I could do it properly, around this level. Let's just make it bigger so we can all see it. Okay, so that's your Marabou line. So if you can see here, we've got a bearish engulfing candle, and I know I'm sort of doing a bit of a history lesson here, but this is just to explain what I look for, and then we'll get down to what's happening around here. Okay, so you get a bearish engulfing candle, hits 15 EMA, okay, so hits support, fails to break and close, okay, and moves back up to this Marabou line. And that area there, if you've missed the short trade around this level, or the stop's too big for you, okay, this is then a prime area to look for shorts, okay. Again, choppy price action, never breaks above the Marabou line again, and then we get this engulfing weekly candle here from the 29th of August, okay. And if you notice, the break on that week's close is below the 15 EMA, okay. So it's broke my moving support, okay. I do use trend lines and wedge formations, triangle formations, etc. What the EMAs do for us, or do for me, is they're a moving trend line, okay. They're a moving support and resistance level. So here we break, and then we get this aggressive sell-off, okay, down to cloud support, which I also look at. So in shorter time frames, as I said previously, I'm getting my bias off these weekly candles, okay. So here I've got a bias again here, this Marabou line. I've now got a bias here. As it moves down, I know that there's two support levels, here on the top of the cloud, the weekly cloud, and then here at the base. The principle behind Ishimoku, without going into too much detail again, is that the cloud acts as support, okay, or resistance to the upside. So if you're attacking it from the upside, then it's resistance. Obviously, if you're attacking it from the top, then it's support. And there's two lines of support. There's the outside, okay, and the bottom. So this is our first area of support, and this is our second area of support. You can see we bounce here, move up, never actually breaks and clears the high, and then we come back down. So that's basically what I'm looking for. I'm looking for price action, I'm looking for support and resistance, not just off my EMAs, but off my cloud. And I'm looking for candlestick formations. And this is what I'm looking to do, to break down all the way into my shorter time frames, okay. So I'm using my weekly, I then go to my daily, I then go to my 4-hour chart, I then go to my hourly chart, and for my entry levels, I go down to a 15 or 5 minutes. Now, in a 15 and a 5 minute chart, I forget all about this, because I've already got my bias, okay. So I'm not looking to the cloud, I'm not particularly looking to the EMAs. What I'm looking for is price action, pure and simple price action. So I want continuation patterns, I want reversal patterns at specific areas. So if I've seen the beginning of a trend, so it's pushing lower, I then get a pullback, I'll be looking for an engulfing candle, an inside Arami candle with a confirming candle afterwards, around 50, 61.8%, etc. What are the blue, orange? They're not. The orange EMA is a 62. Okay, and the blue one is a 15. So we've got a 62 and a 15 EMA. Exponential moving average, not just a simple moving average. So just be careful with that, okay? These lines here, the pink line and the green lines, are actually the Zen lines to the cloud. Like I said, I'm not going to go into too much detail about that today, because that would take a good hour to explain how to use the cloud properly. And by that I mean there's so many different nuances with regards to flats, breakouts, false breakouts, etc. It's too much to take in. Okay, so here, euro dollar. So where are we going to go? Okay, this is the tool on the left-hand side. These are called CQG charts. Now, they're a professional charting package. Unfortunately, they're not cheap, but they really do the job. When I press on that candle formation, these yellow highlighted or shadows show me at a glance where certain chart formations are. So here it highlights the bearish engulfing again. Here it highlights bearish engulfing, and here, okay, is a morning doji star. Now, it's on a weekly chart, okay, which is bullish, so it's giving me sentiment. It's after quite a rough 5-wave pattern lower. I'm not too fussed about Elliott wave. What I am looking for is just counting waves down. So we've got 1, 2, 3, 4, and 5. Okay, and also when we start talking about correlation in euro yen, that low coincided with euro yen getting to 261.8% Fibonacci extension. Now, 261.8% Fibonacci extension is the classic end of the sequence. Okay, so that's when the bears have lost control or profit target, and it's when the clever money or the bank money starts to load up in the other direction. So we had numerous reasons to start looking for long trades here, because of the correlation, because of the chart formation. Okay, and then we've seen this move back up. So now we've got a bias. Okay, we've had one move up. If this is a correction, which I'm not sure that it is at the moment, I think it might even be a longer, stronger trend higher. But if it is a correction, then she should form in three waves. So we should have 1, 2, and then 3. A perfect ABC correction would be, let's put my trend on. Okay, you take the low and the high, and this actual one thing this chart package doesn't do is let you mirror that, which is quite annoying. But the low is 126.24, so we take 126.24, switch my lights on, and then the high minus 134.87. Okay, so we've got 863 points or pips. You will then want to take that from the swing low. So the swing low is 130.03. Plus 863. Okay, 13866. And we want to put that onto our chart. Okay, so A, B, C, or some analysts call it AB leg here, so A to B, and then C to D. So 138.66. So then we want to put a horizontal line. I can find it. Okay, on our chart at 138.66. Okay, what is there? This is also what we've got to ask ourselves. Does it have a chance of getting to that area? If it gets to that area, is there any reasons why it should stop at that area? Okay, we've got cloud. Okay, it's not very thick cloud either, so there's a good chance that she could break through. But we have got cloud resistance. Normally we'll react off it at least partially. Okay, and then we look back. Okay, we've got previous low here. We've got price action around this level. Okay, we've got price action around this level. We've got price action around this level. So we can see that this is an area going all the way back to 2009 that has attracted price action. Okay, and it acts like a magnet. Okay, the market will trade back to these support and resistance levels. Okay, for those of you that don't know, support once broken is then resistance. Okay, resistance once broken then becomes support. So this support area, you can see here it was resistance, okay, then it breaks, it then becomes support, okay, it breaks, didn't hold very well there at all. In fact, inside the cloud, it didn't hold at all, and then we moved lower. So there's a good chance that this area here, this 138.66, is going to be a resistance area. Okay, so we've got a weekly bias. We can see we're in a bit of an uptrend. One thing to be wary of here, okay, we've got this 50 RSI, so we've just clipped it here, moved lower, okay, and we're just pushing up again, and we can see by the angle of this RSI, this relative strength indicator, that the move up is not aggressive. It's not at an angle like the move off the lows, okay? It's more slanted. So we know that this initial move is not aggressive. So there is reasons to be wary, okay, around this sort of area. Let's break it down again. Okay. So this is that leg, that weekly leg up, okay? What can we see? Well, is this a wave? 1, 2, 3, 4, 5, potentially, or is it 1, 2, 3? If it's 1, 2, 3, then it's part of a corrective sequence. Corrective sequences should be in 3 waves. So we've got 1, 2, 3, 1, 1, 2, 3, and then possibly 1, 2, 3 higher up here. Okay. Again, I'm not going to start going back because we've got to talk about 14 currency pairs in 33 minutes. But you can see how the cloud acted as resistance here, pulled lower, 15 EMA acted as support. Okay, so in your short time frames, look for sell signals, look for buy signals. Okay, still buy signals. Inside the cloud, buy signals. Okay, down towards the bottom, the base. It then breaks up. This acts as support. What did we get here? We got an outside bar. Okay, so an outside is a bullish bar. It pulled down to but just under 50% of that outside bar and then rallied up. So it's feeding your view. Okay, it's like reading a book. We can't ignore anything that it tells us. If you do ignore anything that the chart is telling you, then there's a good chance you're going to lose, basically, because the market is dictating where it's going to go. Just because you think it's going to be bullish, if you're getting strong reversal signals at specific areas of support and resistance, then you've got to be wary. Okay, there's a good chance that you're outstaying your welcome. So what's my view here? My long-term view is bullish, but, and there's always a but, isn't there? And that's technical analysis, really. Trend. Okay, lovely bearish engulfing off the top. Okay, inside Arami was our warning signal. Okay, this was the signal to get short off here, and then the outside bar at the bottom. Okay, so outside bar, outside bar. Looks very simple after the event. It's obviously not that simple while we're trading it. So I've got one trend here. I've got a swing high here. Okay, and I'm just going to expand that a bit. Can you all see okay, by the way? These charts aren't confusing everybody. Now this, I called this one last week for a bearish bias. Now, it's a Gartley pattern, okay? So a Gartley pattern has a move lower, a move up towards 61.8% or 60-61.8%, and then a higher low, and then a move up to 78.6. So if we put our fib retracement tool on here, okay, these different lines, I don't know why they're not highlighting. Okay, the red one's 61.8%, this is 78.6. So on your fib levels, if you've got a chart package that lets you adjust them, I know a lot of them just have 50, 61.8%, 38.2%. You want to add some in. You want 78.6%. You want 23.6%. The extension levels, instead of just 161.8 and 261.8, you want 127.2%, and you want 423.6%. Okay, and they 78.6, 23.6, and 127.2 make up most symmetrical patterns. So we've got the crab, the butterfly, the bat, the Gartley, three drives pattern. You need, again, I'm not going to go into too much detail about them today. We do host another webinar again for FX Street where we'll talk about symmetrical patterns. But you need to be able to add those into your Fibonacci tools on your platforms to really sort of benefit from seeing the whole picture. So here we've got our left wing, if you like, because I always talk about wings. Our left wing or leg, and then our right wing. So this is 78.6% here. Now, the Gartley pattern dictates that the market should move lower. Okay. The target level, and this is what, again, few too many people read up enough about it. They just think, well, it's just going to dive from there and take out lows. It doesn't have to. Okay. Sorry, somebody asking the question. What is that? Retracement level. Okay, the retracement level, well, the prime target area is here, okay, which is 61.8. Now you can notice that we've got a, we'll call it a swing low, but this candle here, the 26th of March, the downside or the low that it clipped was 131.92. So I'm looking at that area. I'm looking for a spike into the daily cloud. Yeah, I always give myself at least, if it's an intraday call, I also always give myself sort of 2 or 3, 4 or 5 points. But a lot of the time, it always looks like it's going to reverse at that before it gets there. And a lot of the time, it will actually, the market will come and take it. So it will just spike through it and then move back. I think here you'll get a spike through because we've got this cloud cover coming in as well. So I think what we're looking to do, and again, price action up here is horrible at the moment, but this is an outside bar, okay? So it has got a bias to the downside. I know it doesn't look very bearish, and I think for the last 5 or 6 days, this currency pair has been restricted to about 130 pip range, which is tight for euro dollar. But it is an outside bar. The bias is to the downside. First area of support is here, coming in with a 15 EMA, about around sort of 132.64, and then this area here, this cloud. You're going to get numerous areas of support here. You're going to get 62 EMA, okay? You're going to get this swing low. You've got 61.8% retracement of Gartley. You've got cloud support, which is thick, okay? So there's a good chance that she's going to hold. And what's going to happen? I would have thought we'll be about 47, maybe 48, something like that on this RSI indicator on the hourly chart. So my prediction or my forecast at the moment for euro dollar is a move lower, short term, into 132, 131.90 area, and then our next move to the upside. Any questions? Somebody must have a question. No? Okay. I hope that's a good thing. Let's just clear all of these. Thank you. So, you know, we're combining everything. We're combining price action. We're combining market knowledge. Where do you put your stop? Hypothetically, because that's all I can tell you. I'm short, and the stop is above, which I can say because I've actually taken the trade, is above yesterday's high. The risk reward, it's not mega, is it? If you took the short trade now, you're going to be looking at 65 pips to gain potentially 100 and a bit. Okay, let's go to another pair. Let's go to... So now we're going to look at correlation. Okay, so we've got this bearish bias, short-term bearish bias in euro dollar. So we'll quickly go and have a look at euro yen. To the daily. Okay, so weekly chart. Support from this swing low. Okay, inside the cloud, which is support. What did we get last week? We had an inside bar. Okay, so we've got numerous reasons to be wary. That's wrong, isn't it? That should be euro should be on the high, not the low. That was the backside there. Let's say I want a bullish bias, not a bearish bias. So I must have put the reverse indicators in. So here is 261.8%, which I'll show you quickly. Sorry to confuse myself then. Okay. Again, let's not get fanatical about Elliott wave. We've got 1, 2, small retracement, down aggressive, but it pushed through 61.8%, but a free wave correction. Didn't breach the bottom of wave 1, so this could be a validated fourth wave correction. Nice four wave pattern. Notice how she fails to breach the 15 EMA. When that weekly candle was forming, or during that weekly candle, that would have looked so bullish. And that's why you sort of have to sort of stick to your guns a fair bit. Then we've got the star formation, the doji star formation, okay, at 261.8%. So now we're looking at correlation. Now we've got the euro dollar bullish bias from that weekly low, and then we've got this bias, okay. But what do we also have? We've got a previous high coming in here, okay. We've got an inside bar at the cloud, okay. She has breached both the EMA. She's above the 50. So short-term correction. I'm looking for a small correction, not a big sell-off from this level. The cloud's thin. Sorry, getting all sorts wrong today. The cloud's thin, which means that she can break through pretty easily to the upside. And then we want to break it down again. So let's get rid of this fib, so we can't see it on the shorter time frames. Okay, so this is our low. And again, nice little formation here at the bottom. Not great, but not bad. So we're talking it up. A lower high. Again, not a fantastic chart formation, but she breaks above. Okay, she breaks above the 15, and she breaks above the 50 RSI, and there we then get a decent move up. Now this candle here is quite relevant. So I've lost my cursor. This candle here is quite relevant because she breaks out of the cloud formation with a bullish engulfing candle. Now really you want to be seeing bullish and bearish candles at the top of the bottom of the trend, okay? But I also like to see them at a break of resistance or support. So here we're breaking through cloud resistance to the upside. We're going to move up quite aggressively. Move down. What do we hit? We hit the 15 EMA. We're above the 50 RSI. What do we get? We get an inside bar. Okay. The break at the top of the previous bar is your signal to get long. It does pull back. Where does it pull back to? So we're constantly reading these charts, okay? And no two moments in the market are ever unique, as it says in the book, Trading in the Zone, okay? Which is a fantastic book. I know we had a really good trading psychologist on a minute ago. That's also a good book to look at if you're struggling with the psychology of trading. So we move back to the Marabou line, bounce off, and then we move up. Okay, what did we get yesterday? See, it's hindsight. Inside bar here. Okay, this downtrend is not finished, or the uptrend is not finished. Okay, bounces off, moves up. But yesterday we get an outside bar. Okay, again, somebody's talking to me. Appreciate it. So again, we get this bearish engulfing candle. Okay, the Marabou line would have been a very decent area of resistance. Why? Because it's a Marabou line, and okay, it's holding price action. We're clipping it. We're moving around it. Okay, it's an area of trader interest, if you like. Okay, what did we also have? We have that, okay, symmetrical triangle formation. Symmetrical triangle formation has a bias to break to the upside after a bullish trend. So we're in a bullish trend. It consolidates. It has a bias to break to the upside, but that is all it is. It is a bias, and it's only a mild bias in a symmetrical triangle. Okay, we've broken out to the downside. What happens on more occurrences than not is that the market will come and retest the breakout line. Okay, so we broke out this morning, and we've come back up towards this breakout line, which is around 109.45. So we've got that area. Yes. Again, it's a bit of hindsight, isn't it? It's, you know, we can all look at charts and say, well, that's where I would have gone long, or that's where I would have gone short. Oh, sorry. Would love to get long off that small green inside bar and orange EMA here. This area. Yeah, a great area. So I wonder what we're talking about then. This is a great area of support here. Okay. We've got cloud. We might breach the 50 RSI. Another thing that we've got here as well on this RSI, which is sort of dictating that this trend, or this current trend, is probably coming to an end, is we've got divergence. Okay, so the chart's made this higher high. The oscillator, or in this case the RSI, the relative strength index, has made a lower high. Now, all that tells us is this leg up is not as strong as this leg up. Okay, that's the calculations of the relative strength index. Okay, because it's taking 14 bars, or in my case 15 bars into consideration. So here, the 15 bars would have started about here. Okay, until it got into this overbought territory. And you see why I don't really look at overbought, oversold, because it's only a correction lower, and then she comes up again. Okay, what she's showing here is that the last 15 bars aren't all up bars, if you like, aren't all bullish bars. There's some bearish bars inside it, so we're going to get divergence. Okay, again, it's a good visual indicator, but don't just purely buy and sell blindly on it, you want some confirmation. Okay, so just quickly flick back to the weekly. Okay, the weekly here, we had this spike in, didn't we, into the cloud, okay, which is the week 19th of March. What did we have on this candle, on this chart, this daily chart? 21st of March, we had an outside bar, okay. Has the high been taken? No. So again, good price action at an area of support and resistance. So, but it's not, you can't just blindly sell it and hope that it's going to come down to sort of this area. We've got support zones, okay? It's a short-term correction initially to support, and then she makes a lower high. So now, instead of making higher highs and higher lows, she's suddenly not making a higher high anymore. She's actually made a lower high, but she's yet to make a lower low, okay? Sounds like that TV series, doesn't it? Show my age now. So we've got this area of consolidation, but the bias, the short-term bias on the breach of this has to be to the downside, for me anyway. What we do want to see, what is off the line? We've got 3 minutes left, I'm afraid. What we do want to see is a break at this level, okay? Because at the moment, we haven't made a lower low. But on a break of this level, which is 108.46, then we start to make a lower low, okay? And then the bias should be to the downside. Areas to look for, again, don't overcomplicate yourself, so you're sort of looking for reasons to get out of a trade, not to stay in it. But obviously the first support is going to be here, the trend channel, okay, for today probably, which is 108.09. Okay, so short-term bearish, long-term bullish, euro yen, euro dollar, short-term bearish, long-term bullish. Euro sterling, I'm long-term bearish. So if I'm bullish on these two, then I have to be, or sorry, if I'm bearish on euro sterling, but I'm bullish on euro dollar, I have to be bullish on sterling dollar, unless I've got something wrong, basically. I think these are the only ones we're going to be able to cover today. Okay, so here, again, just chopping around. Nice candle formations. Just chopping around this weekly resistance. Again, it's thin. And again, I'm not looking for a big move lower. Okay, what do we have here? And this is I've got to wrap it up very quickly. Didn't quite get there actually. Okay, that is an expanding wedge formation, which is a continuation pattern, which also has to break to the upside. I'm expecting very short-term bearish in cable towards this sort of area, and then potentially this sort of area as well. Okay, so short-term bearish down towards sort of 159.25. 158.25, so that 100 pip range, and then I'm looking again for price action to take me back up. I'm just trying to flick through charts now because we're running out of time. Okay, this is just holding a head and shoulders formation at the moment. Head and shoulders again should be seen at the top or the bottom of trends. This isn't really, which doesn't make it as strong, but there's a very nice 100 EMA that comes in here, SMA, sorry, simple moving averages, which is just holding this bearish price action on the daily chart. Okay, and I'm looking for it to breach and break this low to probably move down towards this sort of level, 81.50. I'll keep going until Vicky throws me off. again, this is sterling yen. Again, we have that decent fib level down here. Again, we had a decent chart formation. Okay, the trend is strong to the upside. This one I'll be a bit more wary with. Because she seems to be fighting the upside more than the downside at the moment. Again, small bearish, but into this sort of area of congestion, and then long-term bullish, because I think this is just going to be a three-wave correction. So 1, 2, and then choppy 3 down towards sort of 128.96 area, which is again another area of congestion. Okay, any questions before we wrap it up? Nothing at all? Okay. That either means that you all understand what I've been talking about, or nobody understands what I've been talking about. Thanks, Aroma. Let's hope it's the second one. Good luck. We are doing a largely discounted 1-month trial for our service at the moment. If anybody wants to go onto the website, www.first4trading.com, and the 4 being a number 4. Okay, guys, enjoy. Good luck. Remember, price action is the key, but just be wary of when these trends are coming to an end. Do not outstay your welcome. Okay, good luck, and I'll speak to you next week. Thank you. Bye.